The choice now between term life and whole life will be a question of affordability and purpose, which of course takes into consideration the financial needs of your beneficiaries and other factors.
So, this is a major factor. At ito po, ang hatid nito, syempre, higher.
Hello mga ka-RFF! This is again Sean Contreras from Number Financials. I'm here to bring you more content that will hopefully help a lot on your financial journey. This time, Jason and I would continuously discuss more about life insurance and how it can be a part of your financial plan. Meron na kaming nilabas na video about what is life insurance and the many reasons as to why you should get it. Please check this out kung hindi mo pa ito napapanood. As discussed in our previous video, life insurance is a contract between an insured and an insurance company. It provides a lump sum payout called the death benefit to a designated beneficiary if anything unfortunate happens to us. Premiums are then collected by the insurance company to keep the contract active. If you die while your life insurance policy is active, your beneficiaries or people who depends on your income can file a claim and receive the death benefit. And as we will repeatedly mention here in our channel, we buy life insurance not for what it is, but for what it does. Life insurance offers financial protection and that invaluable peace of mind para sa mga tao mayroong mga dependents o mga mahal sa buhay na nakadepende sa kanilang income. In short, ito yung mga breadwinners. As a rule of thumb, your life insurance coverage must be at least 3 times worth of your annual income. Life insurance, as an income replacement tool, provides your loved ones with the time they need to fully adjust from your unexpected loss. And we understand that learning about life insurance can be overwhelming. But Ramver Financials is here to help. We are here to help you figure out what it is you need to keep in mind when considering life insurance in order to make sure that you get what it is that you really need. So when you are looking for the right insurance policy that is suited to your financial needs and budget, one important factor to decide on would be the type of insurance to get. This is because the type of insurance policy that you get will determine the period of time you will be covered and the cost to keep the policy active. Here in the Philippines, there are 2 types of insurance available, which are the term life insurance and permanent life insurance. Permanent life insurance may either be whole life or endowment. The widely popular variable unit linked life insurance or VULs can also be classified as a form of whole life insurance. We will focus on VULs on another video to discuss it more comprehensively. The first type that we will discuss would be the term life insurance, or simply term insurance. Term insurance is the cheapest life insurance product available, and it is a straightforward option to financially protect your loved ones. So term insurance products only last for a defined period or term, and it only pays a death benefit if something unfortunate happens to you during the term of your policy. The term refers to how long the policy is active. Sa mga life insurance companies that we're partnered with, the terms that are available would be 1 year or yearly renewable term, 5 years, and lastly, term up to age 65. The 1 year or yearly renewable term would work like your motor car insurance policies, where the policy would only be active for 1 year. You will then have the option to renew it if you want to be continuously covered. A 5-year term policy will then be active for 5 years and annual premiums will be fixed during the term. Lastly, term up to age 65 will keep your policy active and annual premiums fixed until you reach 65 years old of age. Again, for yearly renewable and 5-year term, it can be renewed but usually at a higher premium after the coverage ends. Nakadepende na yan sa age mo during the time na magre-renew ka ng policy. Again, I would just like to emphasize that the beneficiaries will not be able to receive any cash benefit if nothing happens to the insured during the chosen term or period of time. This is why if you decide on a term insurance, it is very important to keep your policy active and continuously renew it for as long as your loved ones need the financial protection. And if you happen to outlive your policy, hindi ka rin makakakuha ng refund sa premium sa binayad mo na. And I think this is also the reason kung bakit madami ang may ayaw sa term insurances kasi feeling nila parang tapon lang yung binabayad nila kapag wala namang nangyari sa kanila. But again, please be reminded that what we are paying for in a life insurance policy would be the financial protection and that invaluable peace of mind for our loved ones. And in this case, term insurances are the cheapest option that you can consider. Like what we always say about life insurance, it is like that spare tire that we keep in the back of our cars. We don't hope or pray to ever use it, but it certainly pays for when you have a flat tire. The typical term policy is a level term insurance. This means that the annual premiums and coverage would remain the same during your chosen term. Term insurances is also an affordable option to significantly increase your coverage if you are approaching a major milestone in life, like marriage, pregnancy, or taking on a large debt like mortgage. And of course, as you get older and have fewer dependents and debt, you may need less insurance and you may opt to let your term insurance expire. Lastly, it is also important to take note that most term insurances are convertible into whole life insurance plans, subject to a cutoff period. This feature further adds into the flexibility of term insurances. In conclusion, term insurances allows you to choose your term length and coverage amount, which means you pay only for the insurance you need and only for as long as you need it. You can also purchase multiple term insurance policies. You can keep separate insurance policies, like for example, you need a 30-year policy to protect your family and a 10-year policy to protect against a loan or mortgage. Term insurances can also be described as pure or straightforward life insurance. There are no friction costs and it is the cheapest life insurance product available in the market because it has no savings or investment component. There are no cash values and no dividends. In short, no capital is being built up. Next, we have what we call the whole life insurance. Unlike term, it is a permanent policy that would last for the entire lifetime of the insured or until the insured is 100 years old. This means that you don't need to decide on the length or duration of the coverage and the policy matures when the insured reaches the age of 100. It also includes a cash value and savings component, which makes it a lot more expensive compared to term insurance plans. In fact, it is estimated that whole life is 6 to 10 times more expensive than term life. Unlike in term insurances where the premiums increases every time you renew the term, the premiums for whole life remains the same or fixed, even as the insured grows older. This is because the need for higher premiums has been offset by the high premiums collected in the early years of the policy. Meron din tayong mga tinatawag na participating policies when it comes to whole life insurance plans. Ito yung mga plans na pwede mag-earn ng dividends on top of the cash values being accumulated by the policy. The insured can also then take out a policy loan which will be simply deducted from the death benefit if unpaid. This makes whole life insurance an easy way to protect your loved ones financially without worrying about policy expiration dates. You simply need to make sure that the policy is active and premiums are being paid on time so that your beneficiaries can receive the death benefit if something unfortunate happens to you. While term insurances are indeed more affordable, the permanence of whole life insurance plans makes it a good choice for people with lifelong obligations or for those who would want to leave an estate for their loved ones. In conclusion, the biggest difference between term insurance and whole life insurance is that term insurance ends after a set number of years. It can be renewed up to a certain point, but it only offers the death benefit to your beneficiaries should something happens to you within the term na pinili mo. Whole life insurance, on the other hand, would cost more than what you would pay for an equal coverage amount of term life because it lasts longer and it builds cash value. The choice now between term life and whole life will be a question of affordability and purpose, which of course takes into consideration the financial needs of your beneficiaries and other factors. It is then important for us to get into these discussions in order to find out which type of insurance is best for your financial needs. You may inquire in the comment section below if you are interested for a free consultation about this topic. Lastly, if you like the content of this video, please make sure to subscribe, like this video, and hit the bell button so that you would be notified of any of our future contents. Stay tuned and thank you very much for your time, mga ka-RFF.
Just let me save you, yeah. Just let me save you, yeah. Just let me save you.
So, this is a major factor. At ito po, ang hatid nito, syempre, higher